Hello, everyone, and welcome to this Accountancy Age live session. I'm Mariette Armitage, Head of Growth at Accountancy Age, and today we're diving into one of the most important shifts in reshaping the accounting profession: how firms can bridge the gap between operational delivery and strategic influence. With client expectations changing and demand for fractional CFO services on the rise, accountants are being asked to do more than balance the books. They're expected to guide business decisions, manage real-time insight, and build long-term trust. To help unpack how firms can make that leap, I'm joined by two industry leaders: Pete Anderson, Chief Operating Officer at Xeinadin, and Joe Lyons, Product Lead from Modulr. We'll be exploring three key themes today: how firms can use payments as a practice advantage, scale trust through technology, and unlock new advisory opportunities such as fractional CFO services. Before we dive in, a quick note to everyone tuning in online. This is an interactive session, so please feel free to drop your questions in the comments throughout. We'll be answering as many as we can at the end of the discussion. Pete, Joe, thank you both for joining us.
Thanks, Maria.
Great to be here.
Let's start with the foundations: payments. For many firms, payments still sit at the back end of the workflow, but they're becoming a real differentiator. Joe, Modulr has been leading the way in helping firms modernize their payments infrastructure. From your perspective, how can firms start viewing payments as a practice advantage, not just an operational necessity?
Yeah, thanks, Maria. And hello, everyone. Excited to be doing my first LinkedIn Live. Joe Lyons, Product Lead for Business Payments here at Modulr. So I think about working for accountants every single day, every hour I'm alive. My role here is working with over 700 of our accounting partners. And I think even though those are our clients who've adopted sort of a modern payment system, a few things stand out to me from the sort of forward-thinking ones that have really turned into working with Modulr into a big advantage. So the first one would be the firms that have made payments part of their core proposition. So not just an afterthought as an add-on. And this is embracing payments. So what does that mean for driving excitement in their team, for example? Upskilling. What does it mean for driving adoption in their existing client base? How do you put it in your sales and marketing materials? So you've really got to think about this as part of your core offering. It shouldn't just be this afterthought as an add-on. Historically, payments were sort of thought of as really admin and the preserve of the client, and that's fundamentally changed. What clients are looking for from their accountant now is not just that execution piece; it's also the advisory, and payments can be that gateway to that. And the second thing I'd say on this is, use payments to actually deepen the client relationship. So yes, it's about solving payroll or solving supply payments, but this allows you as an accountant, as an advisor, to actually deepen that relationship, become an extension of the team. And so we see firms that embrace payments as part of their service offering and make it part of the core offering. They find it deepens that client relationship. So obviously proud to work in Xeinadin, who exemplify these. And maybe final note would be word of warning for others not thinking about adopting this. Firms that don't necessarily offer payments, I think, will increasingly become conspicuous. Even if a client doesn't necessarily adopt payments straight away, the presence of offering payments is really a sign that this is a modern, tech-enabled practice and one that's built for future growth of that client. So, I guess in other words, it's becoming a real mark of quality.
Thanks, Pete. Bringing this to life from a firm's perspective, how are modern accounting practices like Xeinadin integrating payments technology into their client offerings? What practical benefits have you seen when firms take control of payments experience rather than outsourcing or treating it as an afterthought?
Thanks, Maria. Thank you, Joe. Also my first LinkedIn Live. So good afternoon, everyone. Delighted to have been invited. I think we have to start here by understanding what it is the client's actually seeking to achieve. Using payroll as an example, as it's the service where everyone will most commonly associate a payment component, client doesn't just need it to produce an accurate pay slip. They also need to make sure the correct net pay ends up in the employee's bank accounts. You could argue, in fact, that it's the payment arriving accurately on time that matters the most to the client, as getting that part wrong would materially impact the morale on the ground. You could use a simple analogy here. A person hiring an excavator and a skip doesn't really want the excavator and the skip at all. What they want is the hole it makes and the spoil to be gone. The same's true here, really, in that the end result of accurate payments made to employees in a timely manner is what the client really wants when they look for a payroll supplier. Without the payments component, the client's still left with a key piece of the problem. As accountants looking to cement client relationships, I'm a great fan of maximising the number of clients we do payroll for. Not because it's necessarily the highest margin part of the offering, but because, as Joe said, it builds stickiness as it solves a major problem for the client and involves loads of touch points. Getting the right tech piece in place, though, is fundamental, because without the tech, you're back to either running payroll the old-fashioned way with client accounts, or worse still, pushing the problem back on the client. Neither works in today's world, because the compliance challenges and potential for human error associated with client accounts is completely impractical. And if you push the problem back on the client, you're back at half a service, and you'll soon see that client move on to someone who can offer a full end-to-end service for them.
That's a really strong point. Payments are no longer just about moving money. They're becoming a source of data and insight that underpins smarter client decisions, like you guys are seeing, and services to make that becomes more sticky. That kind of brings us to our second theme, scaling trust with technology. As firms grow and digitize, the human relationships that once defined accounting need to be supported, even strengthened by technology. Pete, you've spoken before about how trust is built through consistency, transparency, and speed. How can technology help firms scale that trust across teams and client relationships without losing the personal touch?
Yeah, you mentioned personal touch there a couple of times, Mariette. I think that's got to remain at the centre of all of your thinking. People who know me will have heard me talk in the past about various ways you can get people to buy into change. The most powerful two of which are because either they understand why the change is needed and they really believe in it, or because they might not necessarily understand the full picture, but they believe in the person driving the change, and so they're ready to go with you and are willing to run with it. Either way, no personal relationship and you can't get that level of buy-in. Looking then at how you build trust, how you deliver technological change effectively, you've got to make sure the people involved understand the why, the what, and the how. When you're part of a smaller practice, and I've been there as well as part of a big practice, it's easy to stay close to each of these because typically they have to be driven entirely by the partners and communicated by a relatively small team. What's challenging for the smaller practices, though, is having enough expertise and support to deliver the change well. This is increasingly true in an ever more complex and diverse technology environment, where suppliers are all competing for our attention. This makes it incredibly difficult for an individual partner to work out which platform to back, which supplier is really going to deliver for them. At larger practices like Xeinadin, where we've upwards of 250 partners, 3,500 team members, 150 sites, the opposite's true. We've got plenty of scale and the ability to bring in specialist team members with expertise. Our challenge is instead making sure our local leaders understand why changes are happening, ensuring they feel they have a voice in what the changes look like and how they'll be delivered. That in turn lets them engage with their teams properly so that our people can see the end goal and what they need to contribute to get us there. This really means great communication and both ways. We've got to listen to ideas and we've got to communicate our plans well. You also have to make sure you can implement the chosen technology well with great support for users, be it team members or clients, and do it quickly so you minimize the disruption. Doesn't matter whether you're big or small, the answer is always the same. It's great partnering with credible suppliers who understand your business and ecosystem and who are willing to provide the resources you need. For smaller practices, this probably means filling the expertise gap. Whereas for larger practices, it's often more about magnifying the available resource through the implementation phase to make sure you can move things forwards in multiple locations at once. For us, that means picking suppliers like Modulr, with proven capabilities and a product offering with a tangible use case that our people can get behind, and then integrating their team with our team to work as a single unified whole till the tech solutions become business as usual. Get all of this right and the personal touch remains, because your team feel well supported, listened to and invested in, and your clients see an improvement to the service delivered by the people who they already know, and who, if it all goes right, will be the people championing each new piece of technological innovation as it comes along.
Yeah, sounds like trust plus personal touch equals positive or successful implementation there. Joe, trust is also central to payments and financial automation. Clients want to know that their transactions and data are safe, but also seamless. How do you see modern payments infrastructure helping firms demonstrate reliability, governance, and confidence, especially as they take on more advisory-led work?
Yeah, I mean, great question. And just to build on everything that Pete said that I agree with, it's probably not a surprise to anyone on the call that payments are one of the most sort of consequential actions you can take as a business, and actually one where you really can't afford to have any risk. And something that I think about on every call we're on with a customer is actually the end beneficiary. So, payroll payments means employees can pay their rent, their mortgages. Supplier payments means a business means that they can pay their suppliers or their own payroll or their loan obligations. So these things are the fundamental lifeblood. And I actually have a personal story back in the day, many years ago. I was running a small business, and the accountant we were working with didn't forewarn us of a VAT payment that was coming up, and it just broke our modeling, it broke our cash flow forecasting, and it had a really disastrous impact on our relationship and actually on the business itself. So the risks are very real. I think there are three things that I'd recommend firms look for when adopting a modern payment solution. And if you get these things right, it's going to allow you to demonstrate to your clients why you can take on those payments. So the first one is credentials. Is the vendor working with clients similar to me? The size of accountant, the size of SMEs. As reference, Modulr is already working with over 700 accountants and practices and thousands of SMEs. Are they proven at scale? How much are they moving? Modulr, for example, moves over 150 billion annually of GBP. Do they have the necessary licenses in place in the jurisdictions that my clients are operating? Can I actually work with them on a global or multi-geo location? So that's the first one, credentials. The second one is the technology itself. So are the products collaborative? Do they fit around your own workflows, your internal controls? Can you work with your client with them? Do they have the right approval settings, for example? Do they deeply integrate with the software you're already using? That might be payroll software like BrightPay. That might be accounting software like Xero. Does it fit how your clients are already using software in the stack today? And then are they thinking about fraud? Do they have modern measures like multi-factor authentication? Do they have confirmation of payee? Are those things in place that mean you can put this in front of your client and it's going to be a trusted and an adopted solution? And then lastly, and Pete mentioned this, and I think it is probably a big theme across all these questions, which is the people that you're going to be working with. Do they have the expertise? Do they understand the business? Are they going to be there for you at the right time? Do they have the correct support team in place that understands the urgency and then the need around payroll or supply payments? And can they work with you when things don't go to plan? And so firms today looking to adopt modern payments technology, I'd start by those thinking about those three things. They're really looking for a partner they can trust, but also their clients can trust. And then, as I mentioned, it's about the end beneficiary as well. So that's where I'd start.
I think that's some great points there, Joe. I think just wanted to pick something up you said in there about the importance of these payments to the recipient. I think this is a really big point. The most important thing in business is to pay your employees and pay them on time. It's the fundamental. If you're the supplier and you've built that payroll relationship and you get it right time and time and time again, you're integral to the business, and the trust is absolute. You get it wrong once, it's gone. So it's incredibly binary. So it's something that, as I say, I think we should be trying to do more and more and more of. Every new payroll client to me is brilliant, but your tech's got to be spot on. Your process has got to be spot on, and you have to have complete faith it's going to go right every time.
I could agree with that more. I think if you contrast it with other software tech in the space, so for example, processing an invoice, which is something we do as part of our Modulr AP product, we can always go back and correct one of those things with a journal. We can correct the GL code, right? And it's not going to have a huge impact. If we miss execution of that payment for an employee as part of payroll with the right amount, this could have disastrous impacts on that individual. So you really have to get these things right. So yeah, I couldn't agree more with you.
Yeah, I think we're back to those points of kind of credibility and trust that keeps coming up. And I think it's clear that technology done right doesn't replace the human connection. It amplifies it by removing the friction and letting people focus on the parts of the relationship that matters most. Our third and final theme today is advisory uplift. And this is where things get really exciting. The demand for fractional CFO and part-time finance director services is rising fast, particularly among ambitious mid-market firms looking for strategic input without a full-time cost. Pete, from your vantage point at Xeinadin, what's driving the shift? How are firms repositioning themselves, both in terms of talent and technology, to meet that growing demand for strategic insight-led advisory?
Great question to finish on, Mariette. There's a few factors at play here, both in terms of the external client-driven demand and the expectations of a more technologically enabled workforce. What our people want to do with their day. Looking externally first, there's no doubt that client expectations have increased considerably in respect to their ambitions for the business and what they expect their accountant, to do to help them realise the ambitions. You could point to myriad factors here. I've picked 3 to go at today, but you could have gone for 10. First, I think we've all become accustomed to greater access to data and to financial information and forecasts being part of our daily conversations. It's a result of big business and government finance has been so much more politicised and newsworthy. You know, it used to be that the budget was a minor news story, and now it's built up for months on end. Every news outlet seeking to draw our attention through graphs, forecasts, metrics. This subconsciously conditions us, I think, to expect this kind of forward-looking information in all walks of life. Secondly, then, we're increasingly used to engaging with technology anyway, in every aspect of daily life. You know, my banking app lets me track spend. A fitness app tells me the trends in my fitness and health. Schools, clubs, and businesses all interact with us on apps. Tech and information is always immediately available, so where it isn't, you actually notice it more. That expectation then feeds into business interactions with accountant and client. Joe said at the beginning, not offering a payment service increasingly looks conspicuous. I think the same is rapidly going to become true of not offering CFO type insights. It will become why don't you, not can you. And then finally, we've got younger generations coming into senior leadership positions. If you look at the stats on Gen Z, because I saw it earlier in the week, nearly half of them are active investors. This could be a result of greater concern about financial futures or a product of social media driving a sense of expectation. Whatever it is, they're used to engaging with data insights and forecasting platforms. And if they can get that for an open market investment, they're absolutely right to expect the same for the businesses they're leading. We can also then look internally as well. And a lot of the same factors are in play. We've got team members who are increasingly used to engaging with well thought out tech and who want to engage in discussions about the outputs from it. The same team members expect us to be invested in that right technology. They certainly don't want to spend their time inputting basic transactions when they know full well there are solutions out there that can automate it. You do not want your team asking you why you're not looking at a better way of doing things. In a lot of ways then, it makes embedding a culture of insight-led advisory a bit of an open door. The teams want to do it, the clients expect it. Getting it in place then can only help us retain our best team members and help our clients grow and succeed. That in turn is going to lead to clients that are more likely to stick with us for longer and who are more likely to need more services from us. There's a last component then to all of this, and that of course is making sure we have the data to feed our advisory tools and services and processes that drive the right client conversations with the right regularity. This means really embracing integrated digital platforms that capture as much data as possible, as often as possible, and encouraging our teams and our clients to proactively engage in conversations about the client business.
Joe, that shift clearly changes what firms need from their financial systems. In your view, how can better cash flow visibility and real-time data help accountants deliver more timely insights and make the value of their advice clearer to clients?
Yeah, I think I'll just build straight on the back of what Pete was saying there around the data point, which is, you know, selfishly from our position as a software technology vendor, what we think about all the time. Quite simply, stale data means your MI and your PL reporting is going to suffer. And as a business, you're going to make worse business decisions. As an accountant or advisor, you're not even going to be able to do that job, right? So it's all about the data. And the two areas that we see and help customers with around the timeliness of processing invoices and then the auto reconciliation of payments. So specifically here, looking at supplier payments, this is the accounts payable process. It's around that bookkeeping lag. So we want to see invoices processed onto the ledger as quickly, as timely as is possible, and we have technology to support that. But then also at the point around reconciliation of the payment, which historically was, let's wait until we do the bank rec before doing the MI reports or doing the P&L reporting, that just doesn't fly anymore. So in the solutions that we've engineered, we auto-reconcile that payment as soon as it's cleared. This means that the MI can be updated in real time, is refreshed, and the PL reporting is always up to date. So hopefully it's pretty clear, the data is the unlock here. Stale data leads to bad advice and actually means you can't do any of the CFO advisory work. So you do need to be working with technology partners that provide that real-time data, and certainly help your end customers start to operate with real-time data. And it is transformative. So what that means is, if you've got cash flow data, instead of reacting to last month's bank's feed, firms can spot those pressure points and actually help clients manage payroll, tax, supplier payments. And it also changes the quality of the advice. So I think when an accountant can see that entire inflow and outflow, the conversations move to what happened to what should we do next. I'm not going to mention the word forecasting, but again, you can't do any forecasting if you don't have any of this data in place, and if you're not starting to make decisions based on that information that's going into your ledger. And as we've mentioned, a theme running through this conversation is, if you're doing this and you're seen as trusted, it again deepens that relationship between advisor and the client. So it really reinforces that they're operating with the best interests of the client at heart.
Yeah, it's such an interesting dynamic, isn't it? Advisory services aren't just about the expertise anymore. They're about the speed and the precision, the insight, technology. It's a new day.
I think so. What I've seen, I'd love Pete's view on this as well, actually, is that over the last decade, as we kind of tipping a hat a little bit to, we've seen these huge innovations in the world of fintech, and of course other software providers to accountants and advisors. And so now, alongside that, you've seen the demands of the client increase. Now you should be doing your payments. Now you should be doing supply payments. Now you should be helping with FX. And then alongside that, you've had this growing, we actually need true CFO or fractional CFO advisory work. Help us start to think about, what's coming down the line, the next 6 months, the next 12 months. Pete, how are you seeing those client relationships change since the advent of all this new technology? And are you seeing them in those quarterly updates push you for more and more advisory? How's that manifest itself, I guess?
Yeah, I think to steal a quote from someone else on this, what we're seeing more is do it with me. So the past used to be do it for me. Here's some stuff. Can you go and produce this out? That's becoming less and less common, and do it with me is becoming more and more. So they want to be part of the process. They want to be part of the tech stack. They want to actually have it in their pocket. And actually that makes it easier for both of you, because the interaction levels go up and you're always on top of the information all the time. So that's my panacea would be every client wanting to be involved to some extent or another in a with me model.
I like that. I really like that. Do it with me. That's awesome.
Thank you both so much. Before we kind of go to your closing thoughts, there's a couple of questions that have come through. So if I'm going to just read them out to you. Trust can be cultural as much as technical. How do you get teams to trust the tech itself? What does success look like 12 months after firm embraces the fractional CFO model for teams and for clients? If you could give one piece of advice to firms wanting to unlock advisory potential next quarter, what would it be? Pete, if we start with you.
It's a stack of questions.
Yeah, that was almost like sliding one, wasn't it? Yeah.
We can break that into 3.
Okay. Look, I'm happy. Did you want to go? I'm happy to try and tackle the tech one first, if you want.
You do tech, Joe, and I'll do the CFO piece.
Okay. Yeah. I think. Firstly, it's a great question, and it extends, beyond what we've mentioned in this call today around like just getting the buy-in and actually making sure you select the right vendor. I really think getting the organization and the team built into it is about starting with a POC with definable success metrics, right? So getting something set up that solves a client's problem, a proven client problem, you get it embedded into your organization, you prove it works over a multiple period of time. That, if, for example, with payroll, that might be 2, 3, 4 runs. And from that, you build credibility and a credential you can then take out to the wider organization. So I would always be looking to start with a POC with defined success metrics, and then using that to evidence to the rest of an organization why we want to buy into that.
Yeah, and before I jump into the CFO piece, just to add to what Joe said there, I think the other thing is hunt your advocates. Whenever you come to do something new in the technology space or update a process, look into your business for those people who your business sees as its own experts and get them involved as advocates. Clearly, you can't involve absolutely everybody. If you've got 5, 6, 7 key people who your business knows well and know what they're talking about, they feel they were involved in part of the process building and the software and supplier conversations, your teams will go for it more because it's so-and-so they've heard of that's backing this. So I think that's another big part of getting it to land. In terms of the CFO piece, then what does success look like? That really starts with more conversations. That's the start of success. The number of conversations will have gone up. I think another piece of success is where those conversations happen will have widened. It's not just a partner having a conversation with the business leader once a year. It's your team members routinely speaking to the clients through the year and pushing some of the power down, because your touch points actually are most regular further down your workforce. If you want then an output of success, that for me is decisions being made. The client's actively saying, do you know what? We're going to do this now, this year, and they're deciding to do something looking forward, not asking you a question about what a number means looking backwards. And when that becomes normal, then you're embedded.
I think that's fascinating. Just to jump in on that, Pete, do you see with your clients then just that forward looking? Do they bring you into that meeting about, do we invest in this new warehousing or buy this new supplier? Are you being brought into those conversations? And if so, then how do you have a measure of that? So across all your clients, which are the ones that we're doing XYZ advisory for? How do you look at that as the COO across obviously the many practices that you work or operate on?
Yeah, so a bit of variability is the honest answer, Joe, and I think it depends for us. We've come together from lots of firms that have brought together to a whole, so we have a bit of variability in people's growth journey and evolution. At the top end, though, what we actually look at is grouping clients into tiers. So people who buy compliance, people who buy support, and people who buy growth. And we look at grouping kind of additional services and advisories into these tiers and say, well, actually, what percentage of our clients are taking support from us? What percentage are taking growth from us? And you look at how that mix evolves, and you look at it really for us in each individual office, because it lets you start to look at where do we need to do some training, where do we need to do some empowerment, sometimes where do we just need to build some confidence. Yeah. Because a lot of this is just confidence.
Pete, I'm going to ask you to look at the next one as well. And it's, if you can give one piece of advice to firms wanting to unlock advisory potential next quarter, what would it be?
Oh, that one, I'm going to sound like a broken record here, but that was really easy. Talk to the clients more. Don't send a transactional email. We as accountants, we are transactional people. That's the nature of being an accountant. And you're very prone to send an email. You can get the facts down and it's quick. Pick up the phone, arrange to see them, invite them to the office. Our chief commercial officer says this all the time. He says, guys, phone in your pocket, pick it up, ring someone. If you want them to come to you for advice, they've got to think you understand them. You cannot understand them if you've not spoken to them. How can you say to someone, here's where I think this, you could look to this next thing for your business, if you don't know what they're trying to get out of that business and what they're trying to get out in their personal life from running that business. So talk, and encourage your team to. I think the further down the team you go, the less likely the phone gets picked up. We've got to change that culture a bit. This is, when everyone's got the same tech, the difference is the people who use the tech. So you need a person to know a person.
Yeah, absolutely. I couldn't agree more with that. Joe, what does embedded payments actually look like inside an accountancy workflow? Where does it plug in and what changes first?
Well, that's a great question. I could spend another 30 minutes talking about how you could embed payments into the workflow, but let me try and succinctly talk about what we do at Modulr. So we go to market with two propositions, one around payroll and one around accounts payable. So payroll payments and supply payments. and we can embed and support any part of that workflow that is required by the end client. And what we found is that clients want to work differently with accountants and advisors, right? Some want to have a completely hands-off approach. Others want to be involved with approving every payment. And so you need to be building technology that supports those myriad different workflows. And so it could look in a fully outsourced model, whereby the advisor is actually processing the invoices, running the approval workflows, putting together the payment runs, and executing those payments, be them domestic or even international, and doing the foreign exchange. And then, of course, everything reconciling back to the books. And really then the client just looking at the reports on a quarterly basis potentially. And that's perhaps an extreme. But then in the sort of more collaborative process, you can see a world where the advisor is working on the bookkeeping, but then the approvals are happening inside the client, and then the client is preparing the payment runs for that week, but actually the advisor accountant is then executing them, and we also see vice versa as well. So I guess my answer is that it really depends, and you want to be working with providers that can meet those myriad of different flavors of your clients, because yes, it's important to have a sort of standard operating procedure when it comes to the tech stack, but you've got to recognize that clients across different industries and different domains, different sizes, are going to want to work with you in different ways. So pick a vendor that can support those different ways.
Spot
Great,
on,
thank you.
I think,
Yeah.
We'd all love to say, I said it before, I'd like every client to go for do it with me. But every client won't go for do it with me. Some clients will want you to do it for them. And you've got to be able to deliver on the client wants, and you therefore need a supplier who can help you deliver on it. So that's a fundamental piece. We've got to be able to flex a bit to client need.
Exactly. And you want to see, as an advisor, as an accountant, you want to see your clients flourish and grow. And as they grow, they are going to bring some of that capability in-house. It doesn't mean a change to the tech stack necessarily. It might just be a change to the process. So you want to be there for them. And what you can also see as well, where sometimes a client starts with a do it for me or even do it with me, as they build that trust, it might go into a fully or more outsourced relationship where it says, actually, I want to hands off. So we see, a plethora of different relationships between advisor and accountant. Sorry, advisor and client, sorry.
Great, thank you. Peter, I'm going to give this one back to you again. How do you measure success when a firm modernizes its payments? Is it speed, error reduction, or client satisfaction?
It's a good one, isn't it? I think speed's probably bottom of the list there for me, because it's all the axiomatic part. You expect it to happen. Accuracy, you could say similar. If you've picked the wrong partner, accuracy won't be there, and accuracy is fundamental to this. So in the end, it's got to be that client satisfaction component. What is the experience for them? They're expecting these things to be fast, and they're expecting accurate. What you can influence is how the interaction feels for them. Does this feel easy? Does it feel trustworthy? Does the client sit at their end and not give it a second thought? If you've achieved that, then I think the client's got total trust in what you're doing, and that's satisfaction, I think, rather than anything else.
Great. Joe, any thoughts on that?
I would wholeheartedly agree. I think it's all about the experience, and actually what's the feeling you're leaving with that end customer. So yeah, I couldn't agree with what Pete said more.
Great. Last question from our audience. How do you see the role of the CFO evolving over the next 5 to 10 years? Joe, if you want to go first.
Yeah, I mean, it's certainly more in Pete's domain, but I think what we're certainly seeing from the technology and the software side, as I already alluded to, is there is now more choice than ever of software you could deploy with a client. There is a handful of different accounting softwares, a bunch of different payment companies, loads of different OCR tools. That's before you get to approval, and the list goes on. So I think the role of the CFO is evolving into both the COO and the CTO, taking some of those domains, because these are core fundamental systems. So, we're definitely seeing a push into the CFO, really. Sorry, there's a dog barking. I was like, hopefully they're enjoying the content. We're seeing the CFO pick up more of that work, is in trying to understand the the credibility behind those different vendors that they're selecting, but also working on those processes with their advisors, with their accountants to make sure they're tight and locked. But looking to the future, I see, both the worlds of payments and banking becoming more integrated into the world of the ERP and the accounting software. And I think for a long time, these propositions have been quite separate. Bank feeds gave this big leg up so that reconciliation wasn't so manual. So that's obviously bringing the payments data into the ERP or accounting software. And then I think where the future is taking us is into a world where these are combined back into a single package. And it all comes back down to delivering that great customer experience for that client. So yeah, the CFO's got a lot of things on their agenda, but for sure it's going to be around putting the best people in place, which Pete's already mentioned, making sure your processes are excellent, and picking awesome technology vendors to work with that can solve your problems.
That was a fabulous answer from Joe, and I feel really mean, Mariette, if we don't just cover Serena's question off, because for me it's the $1 million question. Do you mind? Can we have 2 minutes just to cover off her question?
Yeah, sure, go for it.
Serena, the $1 million question. So if you don't have a local champion and people don't understand the need for change, how do you get them to buy into it? That is always the challenge. I'd love to say that we had 3,500 people here who all listened to everything I said and thought that's a brilliant idea every time I said it. But the reality is that's not the case, because they don't all know me well enough. Find a champion and grow it. That's the only thing, in my view, that works. You might not get champions everywhere. If you've got to get change in wide scale, find where you have got a champion, land something, show it works, widen the reach, you'll find the next champion. That next champion will connect to the next group of people and let it organically grow a bit. And a critical mass will get reached fairly quickly where you then have got that internal champion. But you have to start by finding at least one.
Brilliant, thank you. We have covered quite a lot today, from using payments as a competitive edge to scaling trust through technology to positioning firms to the next wave of strategic advisory. So there's quite a lot to digest here. But before we wrap up, I'd love to quick closing thoughts from each of you. Pete, what's the one thing firms can start doing this quarter to move closer to that strategic advisory model?
Broken record time again, Mariette here. Conversations. Get those conversations in, even if you have to proactively book them in the diary. Find a way to speak to your client.
Yeah, for sure. And Joe, for firms that want to use payments and data to gain that strategic edge, what's your one piece of advice?
Okay, I'll try to be very succinct, but I think I build on what Pete says around it's about the relationship. And from our perspective, you want to be a problem or pain solver for your client. So seek out those clients' pain, their problems, and then work with technology partners that can help solve them, be that through payments, be that through real-time data. And I think that's going to then position your firm for the future, deepen those client relationships, and allow you to be seen as offering this fractional CFO work that I'm sure all the audience wants to be doing with their clients.
Yeah, brilliant. Thank you both. It's clear that the firms who will lead the next chapter of accounting are those who combine operational excellence, trusted technology, and forward-looking advisory. A big thank you again to Pete Anderson from Xeinadin and Joe Lyons from Modulr for sharing your valuable insights. And thank you to everyone who joined us live. You can catch the replay and find more insights like this on accountancyage.com, where we continue to spotlight the people and ideas shaping the future of accounting. Thanks for watching, and we'll see you again next time.
Thanks, everyone.
Brilliant. Thanks very much. Bye-bye.